together. And we've got a great topic tonight that I get questions about all the time is using your 401k or your IRA to invest in real estate. And that's something that I didn't even know that you could do. So I'm going to share some slides in just a minute. But before we dive into our topic, I just want to share a little bit about myself. For any of you that don't already know me, I am Dawn Keller, and I am a real estate investor and also a multifamily syndicator. And I really got started investing in real estate for my own reasons. I wanted to put my money to work. We worked so hard for our money, and I wanted my money to work just as hard for me as I do for it. And I grew up taught just to get a good job and save my money, just become a really good saver. And that's exactly what I did. I put all my money in a 401k. I think I was the first one in my family to ever have a 401k. So I think I'm doing all the right things by saving and saving and stocking it away in my 401k. And I remember on several occasions seeing it drop. My 401k just dropped like 30%, just like that. And I lost a lot of money that way. And I just thought, like, gosh, there's got to be a better way to do this. And my parents are in their 70s now, and they are both still working. I hate that for them. I don't want them to have to work. If they want to work, great. But that is a reality that a lot of people are facing now, is that we think that we're doing all the right things by saving our money and putting in 401k or an IRA. And it turns out like sometimes that's not enough, right? It's not enough for us to retire at 65, let alone, 70, or, if we want to retire early at 55 or 60, whatever your goals are. But that's kind of what motivated me to get started in just putting my money to work. And I did a single family flip. I did one, for all of you flippers, any of the flippers out there, is really hard. And my immediate thought when I did that was, how am I going to scale this? How am I going to do like one flip, single family, and then do that again and again and again? That seems like it'd be really hard to do, and to scale that, right? To grow that. And I was looking for something I can grow like exponentially. So I did a lot of research in different asset classes. I looked at car washes and laundromats and all sorts of things, and eventually came across multifamily and syndicating. I don't even think I knew what syndicating was. So I learned kind of how that works. And I remember, thinking like on a larger scale. I used to live for any Dallasites that are on here tonight. I used to live in Uptown. This is many years ago. And I remember driving to work every day, and every small patch of grass that you could find, they're building apartment complexes. And I just remember thinking, like, who is doing this and how do I get in on that? Because there is some serious money in there. And I thought, like, it's all big corporations, institutional money, and it is a lot. The majority of it is, but there's syndications allow people like you and me to own properties just like that. And I had no idea that was even an option to invest in. So I kind of got involved in that, just passively investing my money. And then from there, the more people that I talked with, I realized that there's a true need for this. Like, more people that I talked to have said, well, I'm looking for something I'm interested in that. And I think that there's a lot of people in my situation too, that were looking for something that just, we didn't even know what we're looking for, but there's definitely got to be a better way. I think a lot of people understand the value of investing in real estate, for the growth, the appreciation, but they just don't know how to get started. Or they don't have the time. That was a big thing for me too. So I kind of just grew it from there. And now I became more active as a general partner. And now I'm in over 800 doors. And my partners and I own 75 million in assets under management. So it's just been phenomenal. It's a great model for someone that's looking for to really kind of put their money to work. So if any of you can relate to that, it's always helpful to kind of see what other people are doing. But tonight, so I'm going to share my screen here because I've got some slides I want to share with you. So bear with me, because I am doing the dual screen thing, which is always interesting to me. So let me see here. So I want to make sure that you guys can see. I think I need to switch out that. I want y'all to be able to see, I'm going to try one thing and see if I can fix something. Bear with me for a second. Okay, I think y'all can see that. If any, I'm gonna, you know what, I'm gonna get my chat over here too. I'm gonna grab that so that way, if y'all have any like audio, video, anything that that is going wrong, somebody yell at me. So you should see a screen now that says how to use your 401k or IRA to invest in real estate. So that's our fun topic for tonight. So let's go ahead and dive in here. But first, the fun things. First things first. Disclaimer, the information provided is for educational purposes only. Dawn Keller, that's me, is not a CPA, tax advisor, or attorney. The information is not intended and may not be relied upon as tax, legal, investment, or other advice. So just want y'all to keep that in mind. And, I also want to say something too, that I'm not selling anything here. I'm not selling a program or anything like that. When we do syndications, if you and I connect outside of this, then you have an opportunity to get access to private deals that are you don't just see like on the market. So it's a great way to kind of get started in investing in bigger projects, like multi-million-dollar projects. But I'm not selling anything here. I like doing this for education purposes. I just feel like there's a lot of people, like I mentioned, that are in the same situation that I was in and didn't even know that there's other options out there. So I like providing these, little short content. I try to like do these 30-minute webinars here and there. So we can kind of skip over this part, but I'm going to real quickly. I just want to mention, I did already kind of cover a little bit about my background, but this also multifamily, it takes an entire team. It's not just me. I have partners and we work with professional management companies, attorneys, CPAs that really kind of pull together. These are multi-million-dollar deals. So it's a lot, it takes a lot of team to put this together. So those are just some of the partners that we work with there. And then just briefly, a little bit background on what we do. So we buy, as a syndication, we buy multi-million-dollar apartment complexes called multifamily, and we improve the condition of the property and the operating efficiency, and then we sell it for a profit. So when we form a syndication, it's essentially a syndication is just a group of investors that's pooling their money together to buy a larger asset. We all co-own that property, which I think is really cool. So whether you're an active, like you want to be really involved and you want to be a general partner, or a passive, like you're like, man, I don't want to do any of the work, but I just want to put my money to work. Either way, you still co-own that property. You're still a partner in that. And I think that's really cool. So, and every deal is its own. So if you're not thrown into a REIT or anything like that, you get to look at the exact property and decide for yourself it's something that you want to invest in. But it definitely is a great way to just create passive income and grow your wealth. And I also love this business because it's kind of a feel-good business, right? These are communities, these are homes, right? We've all lived in an apartment complex at some point and maybe still do. That's the trend, right? Is to go back to renting low maintenance. I love it. And so, but these are people's homes, right? So you're making a better community for everyone to live in. And I like that part too. And this is just kind of a structure. I think we'll skip over this part real quick, but this is just a structure of a syndication. I think this is from a different slide. My apologies. But you've got your general partners and limited partners, basically anyone who wants to be hands-on, limited partners, anyone who doesn't want to do any of the work, but wants their money to work. And then the property, we all co-own that property through an LLC. Okay, so let's dive in. Our fun topic tonight. So how to use your 401k or IRA to invest in real estate. So usually when you are investing in something like real estate or a syndication, in our case, you would use, there's mainly three sources of funds. You're using either cash, that's the most common, but a lot of people don't know that you can use an IRA or 401k. So that's those last two. It's what we're going to talk about tonight. So, we're going to focus really on IRA because that's really how you do it. But I guess I put in the 401k in there because you can use a 401k. You are just rolling it to a self-directed IRA. In either of those cases, you're essentially rolling, if you have an existing IRA, an existing 401k, either one, you can roll those funds or a portion of the funds, not the whole thing, a portion of those funds into what's called a self-directed IRA. The only caveat that I will say here is that if your 401k is with a current employer, most of the time they will not let you roll it into a self-directed. So you have to check with your employer, but my guess is probably not. If it's with a previous employer, should be no problem and you can roll it. IRA is no problem. So what exactly is a self-directed IRA anyway? Really, it really just means that exactly kind of how it sounds is the IRA owner, that's you and me. We are the owner of the IRA. We get to dictate what we want to invest in. That's really it. There's no legal distinction between a self-directed IRA and any other kind of IRA. It's exactly this. It functions exactly the same. We just have more control over it. And so it's a lot more flexible. It really ultimately means that you've got a greater diversification. So I kind of put like a little chart here that looks like it got off center, but that's okay. So in a traditional IRA, like on the right side, traditional IRA, there's a ton of them, right? But let's say your IRA is with Fidelity, Schwab, Vanguard, whatever. There's a bunch of them, right? You're buying their products, whatever they have to offer. But in a self-directed IRA, you have so many more options of what you can invest with. It could be real estate, it could be private entities, businesses, notes. So there's a ton of options that you can do once it's in a self-directed. It literally means that you can dictate what you want to do with those investments, where you want to put that money. Do want to mention too, probably a good time to do this is I had somebody ask me one time, I don't think I was explaining it very well, and they thought that I meant that you're withdrawing money from your IRA in order to invest in something, real estate or business or whatever. And you're not withdrawing anything. There's no penalties or taxes that you would pay when you do a self-directed IRA. You really are just transferring funds into a self-directed IRA account that it acts like any other investment. So that's the cool thing. There's no withdrawal, no penalty or anything like that. So what are some advantages of using a self-directed IRA? Like, why would I want to do this? Number one, I would say is diversification. And I think some people confuse diversification thinking that it's investing in different things within the stock market, like technology and emerging markets and healthcare. But really, what it means, or what it should mean, is investing in assets outside of the stock market. True diversification is investing in different types of asset, where you could really look at equities as kind of like one asset. And so this gives you the ability to truly diversify and invest in different asset classes. And tax savings, love this one. And that's one reason, of course, that we all like our IRAs or 401ks, right, is for those tax benefits. So depending on what type of IRA that you have, whether it's a traditional or a Roth, is going to depend, right, on the difference of how you're taxed, right? So traditional is going to be your pre-tax dollars, and then your Roth is after-tax dollars. So, but they're going to be taxed the exact same way as any other investment that you would make. So we like to invest with inside our IRAs because of those tax benefits, right? Those tax deferrals, or being able to accumulate wealth and money inside those IRAs tax-free, essentially. I've actually looked at both options for myself. I prefer a traditional IRA for what it's worth. Everybody has their preference. I know that people say, like, well, with a Roth, since it's post-tax, you might be in a higher tax bracket later on in life. I think I'm at a point now where it doesn't matter. So I think the pre-tax dollars, I've actually done some calculations on it, and I like the pre-tax dollars. It can grow so much faster because it's pre-tax. You've got more money to start with, and then you can grow that exponentially. So I prefer that, but everybody has their preference. But either way, there's tax benefits no matter what kind of IRA that you have. And then also, the last one would be like investing in what you like and what you know, like what you're interested in. If there is some sort of business or, I mean, I like real estate, so that's what I like to invest in. That's what we're talking about tonight. But if there's something that you're interested or you know a lot about, like invest in that. That's kind of fun that you can be able to take control and really put your money to work in something that that you know and that you like. Regardless, the whole idea is really about putting your money to work and maximizing your returns and that overall growth. So I'm going to share an example in just a minute. I've got a graph that kind of shows what that looks like. So it's pretty cool. So I'll share that in just a little bit. But so what can we invest in? Like, what are my investment choices? First, we'll look at real estate here on the left. So real estate, it can be any type of real estate. It can be single family. If you want to buy a home, you want to do like you want to buy and hold, right? You want to be like a landlord where you want to own, a few single family homes around in DFW or wherever you live, and you own those properties and you rent them out, or short term rentals, or whatever you want to do. Absolutely, you can do that within your self-directed IRA. Multifamily, that's what I like to do. Commercial, it can be, office space, retail space, land, tax liens, those all are acceptable. Then you've got private entities, businesses, you could do startups, you can do your own businesses like an LLC, a limited partnership, joint ventures, trust, oil and gas. Those all tend to qualify for investments that you can do inside of your IRA. And then you've got notes. This is a popular one right now because notes have been paying pretty solid, consistent interest. So that's great. Mortgages, secured or unsecured loans. That's a great option as well. Essentially, anything that is an investment, as long as it is considered an investment vehicle, the IRS is good with it. And then there are a couple of things that the IRS says that like don't qualify, but for the most part, all of these are good things. They're all qualify as things that you can invest in. So, well, how do we do this? Like, how do you set up a self-directed IRA? It's actually really, really easy. So step number one would be that you choose your custodian, and we can help you with this if you don't know any custodians that do self-directed IRAs. But a custodian is essentially where does it live? Where does your IRA live, right? And we have a company that we work with that is phenomenal. That makes it so easy. They hold your hand through the process of just setting up your account. It's super, super easy. Number two is move your funds from your retirement account, so your IRA or wherever it is, into a self-directed account. It's tax-free. Again, this is not a withdrawal. This is just moving funds from one account to another. There's no trigger or anything like that triggers like a tax or a penalty or anything like that. Step three, you provide your custodian with the investment documents. Let's say you want to buy a single family home that you're going to rent out, right? So, or a flip or something. So you would provide your custodian where you want to set up this IRA. You would provide them with the documents because they're going to end up signing these documents as alongside you. So you would send them, here's what I want to do. Here's the investment, or here's the property that I want to buy, whatever you choose to invest in, and they're going to sign that alongside you. Step four, your custodian funds the investment directly. So they basically when you roll that money, the funds, whatever, again, it's not we're not saying you roll your entire IRA. You can just move a portion of it. Let's say let's say you have $1 million in your IRA and you just want to move $100,000 of it into your self-directed IRA. That way you can use it to buy that property, right? So, and then the custodian is going to wire the funds for closing. And then step five, your investment is going to be titled in your IRA with your name on it. So it's going to be, usually it's like something like IRA for the benefit of FBO and then your name. So that's how the property is going to be held in title. And then from there, any income, any gains, they're going to go directly into your account, just like they normally would, tax deferred or tax free, depending on the type of IRA you have. They go directly there. And again, it's treated like any other type of investment, which is amazing. So it can accumulate there tax free or tax deferred, and you can grow that wealth even more. So acts the exact same way. So let's say, just for example, let's say that they can normally in your IRA, let's say you own McDonald's and McDonald's pays you distributions or dividends, that those dividends would go directly into your IRA. It's the exact same thing. It's the income that you're going to produce, that you're going to make from that investment. It's going to go right back into your IRA, just like it would be if you own McDonald's stock. And one more thing that I would just add here is it can take a little bit of time. I'm just a few weeks. We're talking weeks. It's not a long process, but the back and forth, and it can take a little bit of time. So I would set it up ahead of time. Just go ahead and set it up. If you have any thought, if you might have an interest in buying something in your IRA, I would just set it up now. Just go ahead and get the paperwork done. That way, if you do come across something that catches your eye and you're like, man, I really would like to jump on that. Especially sometimes in our business, it can take us some time where and you might miss the window, right? So it's good to just have it done, ready to go, and that way you'll be good to go when the time comes when you see something you wanted to invest in. So I'm going to still share that graph with you, but before we do that, let's look at just a couple of things of like why multifamily, because you might say like, well, Dawn, my IRA actually does okay. So, I mean, plus I won't even be able to touch that money for like many years. So why in the world would I want to use my IRA to invest in real estate and specifically multifamily? Okay. So here's a few reasons that we love investing in multifamily. Steady cash flow, definitely. Now for IRAs, it is still cash flow, but again, those dividends are going to go directly into your IRA. So it's going to stay all within your IRA. But I love a few of these things: strong demand and stability. Stability, I'm jumping ahead a little bit, but that was probably one of the reasons that I was looking. Remember I mentioned about my 401k just being like down 30%. I was tired of the volatility. I don't know about y'all, but like I got really tired of that volatility of like the up and down, like down 30. I mean, last year, I think retirement accounts lost something crazy. Do I have it on here? Do I have a stat on here? I have it. S&P was down 18% last year. I think retirement accounts last year were down like 28%, something like that. Now I know the market bounced back this year. So, but like pretty much that's a wash. Like for 22 and 23, it's like a wash. I was just tired of that volatility. So the strong demand, I'm kind of back up here. There's always going to be a need for apartment housing. There's an unprecedented migration like Sunbelt to the Sunbelt states, and you guys all that live in Dallas and Fort Worth, like you all have seen that firsthand. So you can see that there is a strong demand for apartment housing. There'll always be a need for it. Then you've got stability. Again, this is I think from Forbes said this. Forbes said that multifamily has substantially lower volatility than public markets. Multifamily was actually one of the strongest performing asset classes through the COVID pandemic, believe it or not. So it just really it's recession resistant, which is another great reason to invest in multifamily. And then tax benefits, we did talk about some of those. Now, if you're this one here kind of pertains more to cash investors, there is a tax law called bonus depreciation. Now you do get some depreciation in your IRA, but there is a tax law called bonus depreciation where you can get up to 80% of your investment that is going to be shown as a loss. And this is for the 2023. It drops 20% every year until it's phased out. Unfortunately, that tax law is going away, but now's a great time to take advantage of it. So I can share more about that with you guys if anyone is interested in learning more about the tax advantages. And then appreciation, inflation hedge. Over time, real estate appreciates, it increases in value. Yes, there are fluctuations in the market. There is dips. We're in one right now, which is a great time to buy. But over time, properties increase in value. And that's one of the things that we love about that. And then economies of scale, we talked about that, how grouping our money, like pooling our money together in a syndication, we can buy larger assets. And that allows us to scale and grow a lot faster. Okay, so the chart I have is on the next slide, but here's actually kind of, I want to do like a quick comparison. So I did a comparison of multifamily investing versus the S&P 500. Now I should have really put instead of S&P 500, I should have put what IRAs average, because it's actually less than that. I was kind of surprised to find that. So IRA returns are typically between 7 and 10%. So we'll give you the benefit of the doubt, and let's say 10%, but it's actually between 7 and 10%, while multifamily is typically an average of 14 to 18% return. So what does that look like? I mean, they both sound amazing, right? So that's great, but here's what that looks like long-term. So on the chart on the left, on the graph on the left, it was kind of small. So that's why I made this little chart on the right. But the green line is multifamily. The blue line is the S&P 500. And for the multifamily, since it ranged from 14 to 18, I took 16%. I did 16% on that. S&P, I did 10%. And let's just say on a $100,000 investment of what that looks like, I did 5, 10, 15, and 20 years. You can see that in the chart on the right side is probably a little bit easier to follow. So let's say we did a $100,000 investment. If at year 5, at a 10% growth, it'd be 165,000. In multifamily at 16%, it would be 221,000. Okay, not bad. I mean, hey, I kind of like to look at this as like, how far out are you from retirement? Are you 5 years, 10 years, 15 years, 20 years or more? So 5 years, okay, great. Hey, it's still, what is that? 50 grand or so. And I mean, makes a big difference, right? 10 years, you're talking about 2x. It's a 2x difference. It's a doubling your money type difference. 15 years, 2.5 times your money, going from 445,000 to over $1 million. And then 20 years, 732,000 to 2.4 million. It's a 3 point, I don't know, it's like 3.3x, over 3xing your money. That's the difference of your overall. And these are just, it is overall return. It is, it's kind of grouped like that, but it's kind of astounding when you look at it that way, of the difference of just those few percentage points make. So that's another compelling reason of why to just take a portion, just diversifying some of your IRA into some sort of real estate. And this is one example of a property that we own. This is just the type of properties that we buy, so you guys have an idea of what we look for. This is a property for any, again, of my Dallasites in the area. This property is right by the Galleria on Peterson. So if you guys know the Macy's side, like of Galleria, it is right there off of Peterson. It's a 1980s property. We bought this property for $30 million and are putting about $2 million into it. The returns on this cash flow is about 5% a year. But the overall projection for it's a 5-year hold is about 100%, which means it's 2xing your money in 5 years. So love this property, but just a quick example so you guys can kind of see what we are buying and what we look for. And that's it. So I end with a couple things, 2 things. One, this is a referral program that I have is for any referrals that you have, if they become an investor with us, then, or with me, we will donate $150. Actually, I just bumped that to $200. So $200 for your referral, if as a gift, I can give that to you in cash or charity of your choice. And that's really it. So you can scan this QR code here if you would like to. I mean, listen, this is what I always say is like, I feel like we work so hard for our money, and in putting, here's what I would say. I think when we think about like financial freedom, we think about, what does that really mean? I think it's time. We want our time back, right? We want time to be able to spend time with our families and travel and do the things, go to our kids' soccer game, whatever it is that makes your heart full. That's what we really want. And that's the reason that I love this business, is because you can buy back your time. Getting to your goals faster. I don't want to work until I'm 70. I want to retire when I'm 55, whatever it is, whatever your goals are. That's the reason that we do this. So again, I'm not selling anything, but I would encourage you to maybe take time to just, if you scan that QR code, you can set up a 15-minute call with me, 10, 15 minutes. Let's just chat, see if it might be a good fit for you. If not, totally fine. But at least it's education, right? It's taking one step forward. And that's what I would encourage you to do, no matter what it is just take that next step towards your goals or your dreams, whatever that may be, because I promise you a year will go by. I mean, it's almost Christmas, you guys. Like, I mean, how does that happen? It goes by so fast. I'm so glad that I started when I did. I would not be in the position I am today if I hadn't started a few years ago. And I just encourage people to just get started somewhere. So I'd love to get you plugged in. If we can set up a call, or if you're interested in just getting on our insiders list, just to be in the know of different webinars that we do, or we do some in-person events, or next deals that come out. So, but happy to help. Definitely get plugged in. Thank you guys so much for joining me tonight. Have a wonderful evening. Talk to you next time. Bye-bye.